Hi, Ian here from Be a Winning Trader, and today is the 24th of June, so Wednesday the 24th of June, and the market that we're trading is the S&P 500 futures market, and the symbol being ES, and we are trading it using our price action methodology coupled with our proprietary software trading tool that in this instance paints the bars red, as you can see, for weakness, but also if there was strength it would paint the bars blue. Now I just want to explain a little bit about our methodology and indicate why we entered this trade. You can see here that we've got a $2,200 open profit at the minute. We're trading two contracts, and we're in the trade from 30.50. It's now at 30.31, and I think what I'll do is I will buy one contract back at 30.30. So I can just do this, buy
Order
one
pending.
back at 30.30, and that means that I've locked in 20 points. So I have, if it happens to hit 30.30, I'll just bring that up. So there we go. Plus we have our stop protecting us here. Anyway, the reason for this trade is quite simply this. We obviously had our price action indicating that we were making lower vertical bar trading pattern highs, and we had red price bars. But also the key aspect of this being that the key aspect of this being that if I take a look a little bit closer at this market, what the basics of price action even mean. We had a very bullish daily bar here, and why we had a bullish bar, the close was closer to the high than it was to the low. And then today, once this market broke 30.60, that's like flipping a coin in its head. That turned a bullish situation where we should have taken the high out of this bar to the upside, but instead we've now broken the low. And if you've done that, that is very, very, very bearish. So that there meant that I was now looking for short or sell signals in this market, and then when we go back into the market again, you can see very clearly this is what we were getting. We were getting weakness, we were getting red bars, we were getting the market starting to come down, and once it broke 30.60, then we were looking to enter this market. And again, I got in a little bit late because my entry was well below 30.60, because I went into a slightly smaller price frame chart to enter my trade. This is an 8 range chart, and I took my trade off a 4 range, but because it's the 8 range that is my main trading market, is that market that I am now going to monitor. Now what I will do is I will put on a 4 range and we can watch it together. This is the 4 range market here, and if I scroll back you will see very clearly where I entered the trade. I entered the trade in here when I got a lower vertical bar trading pattern high, and that was why I entered it. And this market is just falling. It's a fantastic trade, so much so that our stop is away up here, and I'm not going to give. I've now only got one contract left. Look, one contract, because I'm after getting filled. In other words, I've made
Order
locked
cancelled.
in 20 points profit on one contract. I will bring this down now, because remember, a market will not always fall. It will turn around. Okay, it will turn around. So I will try and give it a little bit more, I call it wiggle room, but it's a fantastic trade. With now on this remaining contract, I've still got 1,450, 1,360. You can see that it's moving quite a bit of open equity, in other words open profit. So no way will I not have made money on this. I've already locked in 20 points of one contract. Each point, full point, is worth $50 US. So in other words, I've earned $1,000 US, which is now banked, and I'm going to at least bank the guts of another 1,000, if not more, hopefully. I'll just put this back up to here, 30.36. The market, remember, will always bounce back. I don't want to put my stop too tight, because that was we always want to give it a little bit of wiggle room, I call it, as I've already said. In other words, that the market can go up a little bit and go back down again, and then if it does not make these lower lows, in other words it cannot break this previous low here, then that's at that stage that I would consider then bringing my stop down and either getting more profits than the 20 that I've already locked in my one remaining contract, or perhaps getting slightly less because I've given it that little bit of wiggle room. But there's one sure thing: I have $1,000 bagged in the bank, and I'm looking to add to that, and hopefully that will happen. I will pause this video now. Remember, this market is the S&P 500 futures market, and it is a very, very good market to trade when you're using our methodology, and certainly adding our proprietary software trading tool to that also confirms each signal that we take. So I'll just pause this for a second. Hi, I'm back again now. I'm monitoring this market on the 8 range, because now what we've got is we've got what I call a lower vertical bar trading pattern high, and this has been confirmed by up here. So it means now I can very, very, very easily bring my stop down to just above that. So I can bring it in this position down to 30.3250. And by doing that, it means that if this market doesn't take this low out and happens to go back up and take this high, then it's quite probable that this lovely trending move that we're in is over. Again, I have 1500, 1462. You can see it moving about here of open equity. Okay, after already locking in $1,000 on the original position. Now we've made new lows here. This is good. This is good. And we're now down through what we call an S2 line. So this could be another area, and it might mean that I should bring this stop underneath, lock in another few points. So I've been pretty aggressive in my stop now. If I want to leave it, technically speaking, I should be leaving it just above where this blue line is here, the horizontal line. But look, it's made such a move down here that, and it's came to another S2 line here, which is support 2, that it may give a little bounce here. It may give a little bounce. So I just want to be protecting as much of my open equity and as my profit as possible. I'll just pause this for another second. Let's see what happens now. Thank you. So we have we've made new lows, if we know, as you can see here, and again, it's quite possible. I'm not going to leave this market to bounce up to where strategically my stop should be at this stage, and that is the understanding behind that is because we've moved from below 30.60, which was when the market broke the low, the bullish bar low that I've already explained yesterday, and it's now went down to 30.20. It's moved 30 points, which is quite a decent move down. So I'm about to be stopped out here. Again, I'm going to be locking in at 30.28. That's going to give me another 1,000 plus 2 points, which is 1,100 of open equity. Maybe more. You'll see it up here. There we go, just over 1,300 actually. So I'm now stopped out. So that was a trade that equated to on those two contracts, that equated to $2,400 US. A beautiful trade, you can say. And remember, it is beawinningtrader.com if you wish to learn how to do this yourself. Attend one of our free webinars. We call them our free trading master classes, because literally they are master classes what you will learn. All right, on each master class we will show you exactly how to trade. There is the email address, or there is our website address rather, and you will see quite clearly in more detail how we make our decisions. Okay, so look, thank you very much, and I hope you enjoy watching this video. Thank you.